Good morning, traders. It's Thursday, and here's your global market briefing covering the US dollar index, WTI crude oil, gold, and the Australian dollar. So, starting with the US dollar index, the index extended its decline on Wednesday, slipping to 97.2 amid renewed developments in trade policy. Reports suggest that the US is to reduce tariff on the EU to 15%, aligning with the recent deal with Japan. Though this signals stronger US trade relationships, capital inflows from Japan and euro strength are capping the dollar's upside. Treasury Secretary Bessent hinted that the tariff truce with China may extend beyond its August 12 deadline. And meanwhile, FOMC minutes show that some Fed members now view tariffs as inflationary and supporting the Fed's decision to hold off on further rate cuts for now. And on the technical front, the dollars remain range-bound below 98 mark, trading within a downward channel. It is currently under the Bollinger midline at 97.48, signaling short-term weakness. Resistance now sits at 98.58, the 50-day moving average, while key support lies at 97 and 96.67. So next, WTI crude oil. The crude oil hovered near 65.3 per barrel for a third day of losses. The sentiment remains cautious as hopes for a US-EU trade deal fade, raising concerns over slowing global demand. The EU's latest ban on over 100 Russian tankers had limited the price impact as markets expect Russia to redirect exports elsewhere. Since the Israel-Iran ceasefire on June 24th, oil has traded sideways with no major supply disruptions. Inventories are tight, supporting prices during peak driving season, but bearish macro sentiment and geopolitical uncertainty continue to limit gains. And on the chart, a strong support remains at 64. If this zone breaks, the next downside target is 63.72. To the upside, a resistance lies between 67.47 and 67.78, with the $70 psychological mark still out of reach for now. Next, we talk about gold. Spot gold slipped below 3,400 to trade at 33.87 per ounce, down more than 1.2%, as optimism over a US-EU trade deal weighed on the safe haven assets. However, the weaker US dollar offers some support, and longer-term sentiment for gold remains bullish amid the rising global de-dollarization. The central banks continue to shift reserves from dollars to gold, reinforcing a long-term upside potential. Gold recently broke out of a 5-week consolidation, and the move above 3,400 earlier this week was seen as a news-driven breakout backed by technicals. Currently, gold is supported at 33.70 and 33.41, while resistance stands at 34.52.7 and 3500. A sustained hold above 3400 could signal further gains in the coming sessions. And last but not least, the Australian dollar. The Australian dollar traded above 0.6580 on Wednesday, extending the gains on US dollar weakness and a more balanced RBA tone. Markets are eyeing the July 31st CPI release, which will be crucial in shaping rate expectations. And meanwhile, the unemployment rate has edged up to 4.3%, highlighting the inflation risk. In the US, political pressure on the Fed continues, with President Trump demanding the rate cuts and questioning Powell's position, factors that have fueled Australian dollar strength. And technically, the pair remains in a rising wedge pattern, trading near 0.6550. A golden cross is supporting medium-term bullish momentum, and the RSI at 57 signaled modest upside. Immediate resistance is seen as 0.66 and 0.6687, while support lies at 0.65 and 0.6464. And that's all for today's briefing. Stay tuned, stay informed, and we'll catch you in the next update.